Time for Chart Attack, where we bring you a chart that we hope will make you smarter, might even make you a little bit of money. We're here with Jason Press of the Eurasia Group, and we're talking about Colombia. We're just talking Brazil. Now we're going to mix it up and talk Colombia. And for viewers who have not traveled to Colombia, give us the quick view.
Sure. President Uribe in the last decade has greatly improved the security situation in Colombia. That, in addition to Plan Colombia with the U.S. efforts to clamp down on the drug trade, Colombia is actually a safe place in which to visit and in which to invest.
So safe that here's a little stat for you. Medellin, once the murder capital of the world, home of Pablo Escobar.
The drug cartel.
Yes. Safer than Baltimore now. The murder rate is less than Baltimore, Maryland.
Wow. Incredible.
Go
It
figure,
says something
right?
about Baltimore, too.
I know. Yeah,
that's
not
right.
to pick on Baltimore,
we might
but,
get some mail on that one.
But no, I mean, they've done a lot to try and improve, and that was definitely one of Uribe's big focuses, and it's helped the economy as well, right?
Tremendously. It's one of the fastest growing economies within Latin America.
And if you look at the earnings for the stocks that make up the Colombia Coal Cap Index, it looks like about 3 to 4% earnings growth. Are you comfortable with those consensus numbers?
3 to 4%, but it's dragged down in part because of the extractives, the energy sector as well as the metals and mining sector. These are two sectors that I would avoid in Colombia. Strong preference for the domestics.
And look at what investors have been doing to the stocks. Effectively taking them up threefold over, what, the past 10 years. That is incredible growth. And trading now at, what, 17, 18 times earnings. Can you still justify coming in after this big run and buying these companies?
You know, Adam, that's a great question. Valuations are not attractive, but they are attractive relative to Colombia's history. Colombia's pension funds must invest within the Colombian equity market by law, and that pushes up valuations so that 17 times, relative to its history, it's not that expensive.
And can you quantify how large, as a percentage of total market cap, the pension fund allocation is?
It's probably around 15 to 20%.
So that's major. 15 to 20% of all the money in Colombia is staying right there. It puts a bid under the market.
Exactly.
I got to ask
provide
you
a nice floor.
You know, as people look to get into this market, liquidity?
Liquidity
Tough, right?
is thin but improving. It's actually more liquid now than Peru and on par with Chile, which would have surprised a lot of investors a few years ago.